Welcome back. Now, in the second quarter, consumer confidence rebounded somewhat from minus 20 index points to minus 10 index points, with all three sub-indices driving the data, recovering some lost ground during the period. And while morale is at the same level it was a year ago, it is still below the average recorded at the advent of democracy in 1994. Mamello Matikinca-Ngwenya, chief economist at FNB, joins us with her assessment of the data and what it suggests about the contemporary consumer. Mamello, thanks so much for your time this afternoon. And let's start by contextualizing those numbers. Sentiment somewhat improving. Consumers, however, still pessimistic, but we are moving into the right direction. Does this indicate that consumers are willing to spend a bit more?
Absolutely. So I think if we look at, I think first of all, the three sub-indices that we look at in the survey, we look at the economic outlook over the next 12 months, household financial outlook, and the suitability of the present time to buy durable goods, which is to your point there. And I think when you look at that breakdown, interestingly, in the set of results, we've seen an improvement in the expected economic outlook. So where, that index is still negative,
yes,
but relative to the first quarter, it has improved. Interestingly, so when we look at household financial outlook, so we see there that has improved quite significantly. And when we break down that detail by income level, we can see that, the consumers that are feeling a bit more optimistic are your high and middle income consumers, where really we've seen, I think, quite significant improvement. So if we look at our high income households, that rebounded to about -11 from around -30, and for your middle income households to around -7. So really the point here, what this is telling us is that we're seeing that, that additional two-part pension fund withdrawal, as well as the reduction in interest rates, has boded well for that segment of the consumer, which then means, or is telling us, that they are potentially in a better off place to participate from an expenditure point of view, to the point that you made in your opening remarks.
And I was about to go into that, into the spending habits in particular, when looking at the household financial outlook index, which is back in positive territory. Does this suggest that consumers are perhaps confident about their finances moving forward?
Yeah, so that index essentially measures that. So how do you view your financial outlook over the next 12 months? And consumers are feeling more optimistic about their finances and less so about the economic outlook, which is always quite interesting. Because I'm not positive about the economy, but I'm feeling a bit more upbeat about my financial position over the next 12 months. So it could be a function of a number of things. I think the first being interest rates have been declining, and we expect another interest rate cut as FNB. So those consumers could be taking that into consideration. We've also seen through our own analysis that consumers in your higher end tend to benefit from things like a stock market that potentially does well. They have multiple stream of income that might be supporting that view of household finances over the next 12 months. And of course, that story is not as positive in your lower income category, because there we know that, consumers in that segment bear a brunt of an economy that's underperforming. While inflation is low, we know that it's going to turn north over the next couple of months. And of course, they wouldn't have benefited from, the pension withdrawal. So that really speaks to your middle and your high income segment.
And just on the economic activity outlook, which yes has improved but still remains in negative territory. Talk to me about the kind of consumer that's thinking about economic activity. You talked about the high income consumer that benefits from a stock market that's performing well. Are we seeing those consumers thinking about the possibility of a downturn in the economy, in the local economy, in the global economy?
Yeah, so I think if we just look at news flow over the past couple of months, and we also look at the factors that contributed to that, I guess, big decline in the first quarter, So these are global developments that spoke to our relations with the US, for one, that had an impact on that, and the budget 3.0 as well fed into how consumers sort of will look at the economy. And I think if we take a step back and really look at, what are the prospects over the next 12 months and
Yeah.
what may consumers be looking at, we know that the labor market is not performing well. So that is an index that they will be monitoring. And high frequency data, or the latest data around economic activity, is also not very inspiring. So if I take that and combine it with how we see economic activity over the next 12 months, while we do think we're going to see a pickup in economic growth, we're not expecting a notable or significant improvement in economic activity. We know that there's a lot of work that has been done through trying to sort of boost investment activity, but that's taking a bit of time. So I think all of these factors will obviously feed into how consumers view the potential outlook of the economy. That we're seeing global fracturing, we're seeing this persistent and global war that will weigh on sentiment, because South Africa is an open economy, and we will see that in some form impacting us, be it through commodity prices and financial conditions. So consumers will be looking for that. They will be looking for any improvement in employment activity, of which we haven't seen any. So those are the factors really that will influence, I guess, how they view the potential economic outlook over the next 12 months.
You talk about the economic outlook, we talk about, the high jobless rate, and that not much of a supportive environment for the local consumer. But many economists, many analysts are pointing to the resilience of the South African consumer. Like when you put the soft data and the hard data hand in hand, there is a correlation looking at, numbers like retail sales numbers, looking at, how consumer or consumption was really a positive contributor to the Q1 GDP print. Talk to me about how long this consumer can be this resilient within such a tight economic environment.
Yeah, so I think, the resilience that we've seen, and you correctly point out to, retail sales as well as vehicle sales, has really supported economic activity during the second quarter. I think that we are likely to see that momentum slow somewhat or moderate towards 2026. Of course, we do think that the projected interest rate cuts will potentially shield consumers, but I think it's hard to see how that level of activity is sustained upwardly in the absence of notable income growth, in the absence of notable employment data. And I think maybe just to contextualize, when people speak about the resiliency of the South African consumer, household consumption expenditure accounts for well above 50% of GDP growth, right? So any marginal improvement there should be positive for the overall numbers. So we are a very consumptive economy. However, we don't have, I think, the necessary support or drivers for consumer activity, and those will come in the form of employment growth, disposable income growth, and I guess another one is that's quite important is credit growth. And why is that important? It will feed into items or that line that we measure when we ask consumers would they rate the current time as the right time to buy a big ticket item, because we tend to find sometimes you will utilize credit lines to be able to participate there. And what we have seen is that consumers have taken up quite a bit of debt, and they are sitting on relatively expensive debt. So even though we're seeing that there's some relief from an interest rate point of view, consumers are paying back those high levels of debt, which sort of limit to a certain extent how they can participate even more in economic activity. So I think it's quite important just to contextualize that a reduction in interest rates provides consumers who are exposed to debt to pay back that debt. And as they create capacity, then that will then translate in consumption activity.
All right. Mamello, thanks so much for your time and just unpacking that print for us. That was FNB's Chief Economist, Mamello Matikinca-Ngwenya.